Hi everyone. The UK budget was mostly as expected and delivered very few surprises. The key point to note is that national insurance has been cut by a further 2p. This will be funded by changes to non-dom tax rules and also an increase in vape and tobacco duty and an end to tax relief for second homeowners. There were 7 new tax rises. In terms of tax cuts, alcohol and fuel duty were frozen yet again. There were changes to the thresholds for child benefit and VAT for small businesses. He also extended the windfall tax for oil and gas companies that operate in the North Sea, and he increased air passenger duty for business class seats. A well-flagged announcement was the creation of the British ISA. This will have its own £5,000 annual allowance to invest in British stocks only. This was more than some had expected, and we've seen the FTSE 250 index outperform the FTSE 100 index on the back of this news. Self-investment platforms and ISA providers have also benefited, with Hargreaves Lansdown and AJ Bell shares both rising. There were some sectors that missed out in this budget, for example, the house builders. There were no additional measures announced to support UK house building, and there was no cut to stamp duty. Instead, there was a cut to the capital gains higher tax rate to 24% from 28%. UK estate agents, they've seen their share prices rise on the back of this news. However, the home builders have seen their share prices decline. The Office for Budget Responsibility also released their forecasts for the UK economy. They predicted stronger than expected UK growth for this year and next. This helped to boost the pound. Sterling dollar is back above £1.27 and is at its highest level for a month. The OBR also predicted more debt sales, which caused a little bit of volatility in UK gilt yields, although the 2-year UK gilt yield ended up lower after the budget, as it was considered relatively fiscally conservative and didn't include unaffordable giveaways. This was always going to be the pre-election budget, and expectations are now building that the next election could be as early as May. This is the next main event for the UK, but the UK remains in a tight fiscal spot. The OBR is predicting lower than expected fiscal headroom in the future at only £8.9 billion. This is much lower than the average since 2010, and it doesn't leave much room for the next government to play with. That's it for now. Thanks for joining.